afternoon, I'm Nico. Today, our group here to present the annual report in financial year 2011 for Santos Ltd. Firstly, I've mentioned some basic information about Santos. Then Stephanie will talk about the subsidiaries for Santos, and finally, Aaron will focus on the issues of accounting policies and others. There are several principal activities in Santos, such as the petroleum exploration, the production, treatment and marketing of natural gas, and the transportation by pipeline of crude oil. Compared with the previous years, there is no significant change in the nature of these activities in 2011. Santos performed well in 2011, and its net profit after tax is $753 million. David Knox is the CEO of Santos. He has been appointed since 2008, and in 2011, his remuneration is in total about $5 million, and is made up of base salary, short-term incentive, superannuation, share-based payment, and other long-term incentive payments. Ernst & Young Australia is the auditor of Santos. In 2011, its audit fees is in total $1,766,000, and it is made up of two components. One part of the fee is $1.6 million. It is the audit or review fee of the financial report for the entity and any other entity in the group. The other part is the external audit fee, which is $166,000. It is received by overseas related practice of Ernst & Young Australia. Now let's welcome my teammate Stephanie.
I'm going to talk about the subsidiary of Santos Company. Santos has 103 subsidiaries in total, and among the 103 subsidiaries, 101 are wholly owned subsidiaries, and only 2 are partly subsidiaries. And among the 101, 86 are domestic subsidiaries and 15 are foreign subsidiaries. So from this graph, we can see that 17 of subsidiaries are foreign subsidiaries. And we also can see that this company doesn't have any subsidiary that is less than 50% owned. And the group had interest in 7 jointly controlled entities. The group interest in the net assets of this jointly controlled entity was $172 million, and its share of profit before income tax was $36 million. And lastly, Santos Company had investment in 24 jointly controlled assets, and with interest ranging from 11.5% and 100%. The joint venture assets were divided into 3 categories. They are production assets in oil and gas assets, and assets in development in oil and gas assets, and exploration and evaluation assets. Now let's welcome our last speaker, Evan, to talk about more information about this company.
Hi. What I'm going to talk about next is based on questions 8 to 12. So what we have here is the consolidated goodwill, where perusing through the financial statements, we found that there were no goodwill noted, so hence there won't be any impairment of goodwill. Now I'm going to explain more about cash generating units. As defined and quoted in the financial statement as itself, it is defined as the smallest grouping of assets that generates the independent cash flows. So in this case for Santos, it normally represents an individual oil or gas field. And basically there might be indications of impairment, but they subsequently do impairment testing most of the time. And this is normally when the carrying amount is less than the recoverable amount. Tax consideration group. Basically, Santos has a tax consideration group where its parent, Santos Ltd, is the head entity. And this is all based on the Australian taxation law, where all its wholly Australian resident entities are part of a tax consideration group. Segment disclosure. Basically, for Santos, they have divided themselves into 4 operating segments, of which the first one is Eastern Australia, Western Australia and the Northern Territory, the Asian Pacific, and Gladstone LNG. Basically, what is happening here is that the company decided to disclose the segments in such a way is because it is based on geographical region and the assets within the region. And furthermore, this is because this is how it is presented to the managing director for his management accounting decisions. Furthermore, there is another category which is called the Corporate and Exploration segment, but this is basically more of a reconciling item to the consolidation accounts. The accounting methods that are practiced in Santos are in line with the various standards that are in the Australian standards, like AASB 3, AASB 128, AASB 127, and AASB 131. Now I'm going to talk more about what they are going to use when they are. So what happened is, for investments in subsidiaries, the accounting method that was practiced by this company is acquisition methods. Subsequently, for jointly controlled assets, they have to do it by recognizing the financial statements as the group share. Jointly controlled entities, they use the proportionate consolidation method of addressing the methods in accounting. Lastly, even though there's no associates this current year, at the end of the financial year, associates has been dealt with using the equity method. Basically, how it is accounted for in the parent entity account for investment in subsidiaries, they're actually carried at the cost of acquisition less any impairment charges. This is sold by investment of subsidiaries. Now I'm going to look at the joint control entities and the joint control operations. Joint control entities, they are recognized as an investment in the parent's accounts, and disclosures are made in the financial statements to represent how the parent entities are actually being dealt with in the group consolidation accounts. Finally, what I'm going to do is to present to you how the group structure of Santos will look like. Basically, it will be looking at the parent at the top, and it branches down to 4 components which we have identified. One of them is 100% owned subsidiaries, one is the less than 100% consolidated owned subsidiaries, and the control entities and the controlled assets. Basically, we have about 86 domestic subsidiaries, we have 15 foreign subsidiaries, and we have identified that the remaining 2 subsidiaries, which are foreign subsidiaries, Santos has 75% and 70% respectively. We have found from the notes to accounts that the joint control entities have about 7 entities listed there. Their ranges of percentage are none of them has 100%. And for the joint control assets, there are about 24 entities that are listed there, of which there are about 2 of them that are about 100%. I have concluded my speech for today, and that's all that we have to present. Thank you.